Emily, you're just about the most experienced data watcher in the building right now. Can I put a challenge to you?
Sure, Giles.
Now, suppose you were just looking at the data, the PMIs, the inflation figures, jobless, retail sales, and you didn't know anything about Brexit. Would you be able to tell that it had even happened by looking at the data?
Yes.
Go on.
With a caveat.
Go on.
You tell something has happened. There is a spike, or rather a plunge, in pretty much every metric related to business confidence. This is business investment intentions, this is looks at forward orders.
Yeah.
There's a plunge. Where you wouldn't be able to tell, really, is in the spending data. Consumers have just kept on spending.
So explain this to me. Is somebody wrong? Is it the case that the shoppers are in some kind of a false paradise, or the guys in the C-suite have just gone all Chicken Little and decided to run around screaming? Because let's face it, none of them wanted Brexit, and so they're kind of protesting by saying, well, that's it, I'm not going to invest. But if everyone's spending, they're going to want to carry on investing, won't they?
Well, the question is, for consumers, has really anything happened yet? Remember, more than half of them actually wanted Brexit.
Yeah.
They haven't lost their jobs. Inflation, whilst prices are starting to rise, most retailers are hedged against currency risk well into next year.
Yep.
And it's sun shining. England are doing well in the games. What's actually hurting consumers? Businesses are looking at it from a different perspective. They're doing their forward planning. They're looking at their books. They're looking at uncertainty. And I don't think it's necessarily unsurprising that they're judging different risks.
Right. So does this mean that one of them is going to catch up with the other one? And which one is it going to be? I mean, if these guys are being cautious and they're not investing, then ultimately unemployment ought to rise a bit as the people they were going to hire don't get hired and the investments don't take place. In which case, will the consumer have a sort of a delayed reaction? Or are all of them just kind of waiting for the fog to clear and trying to understand, actually, what is this thing that's happened? Because let's face it, we had a government formed and then they all went on holiday and just about 2,000 op-eds about what Brexit means. I mean, nobody knows yet.
Yeah, I mean, I think what we're really going to know is next year. We're going to have to wait till we see when Article 50 is triggered.
Right.
That's only when firms are really going to be able to start to get an idea of what their plans look like. Now, if it looks like the divorce is going to be harmonious and consumers are happy, they've then got the incentive to invest, particularly those those who work on domestically focused things.
Right.
The ones who are trading internationally, they're going to have a significant period of uncertainty.
Right.
I think it would be naive to expect them to bounce back and want to spend money immediately. But you are right, the two are going to have to converge at some time. And it does matter which way they do.
Yeah.
Remember, household consumption is about 60% of the economy.
Yeah.
So actually, if consumers do keep spending, even if international prospects look a little bit worse, that could really cushion the blow and mean that Brexit, in the short term at least, is not a disaster.
And one shouldn't forget that the pound's weaker and more people are coming to the UK. Emily, that's really interesting. Thank you very much.